Hello everyone, it's Michael again with your latest supply and demand market report looking at the commodities complex. I hope you've all been well and that the trading gods have done you well recently. Before we get going, please remember that this is purely for educational purposes only and not a recommendation for you to base any of your trading decisions on. So we'll get into the energy complex first within the commodities, and we'll take a look at what we have on the screen now, crude oil. We talked about it last week when we were looking at this, and we're continuing to look at it week after week. It hasn't moved much. Yes, it has taken out the supply that I mentioned probably wasn't a good idea to be going short at. It even took out that high, suggesting that buyers were trying to get something going here, but obviously that, as we can see, has been soundly rejected looking at the way that period closed. So since then it's gone all the way back again to the demand zone, held it again, and we're back in the middle. So we've still got this market in basically that range, if I can highlight it for you, and nothing much has changed. There's definitely, what we know for sure is that definitely something is going to happen out of this range. What we don't know, and there's no way of knowing for sure with any degree of certainty that would make you take a trade, is which side it would break out in. You like me might have your suspicion based on your own analysis, but that's really all it would be, a suspicion. For example, I suspect it's going to break higher. I have my reasons for that, which I don't have enough time in these videos to go into, but I could be totally wrong with my suspicion. But for now, there's really nothing to do in crude oil, and we're watching to see what happens. I haven't taken any positions in it yet. I'm not very keen at taking trading sideways ranges, sort of selling high and buying low, but I know supply and demand traders who do that, and who do that very well, and in fact thrive in this environment. I don't, so I stay in my lane as much as I can, and try to be good at what I am good at. So that's crude oil. Nothing much to do right now. Natural gas, we've had a significant move in the last few weeks with natural gas, but overall, if I show you, it is still also battling an overall range. What has happened, what we know for fact, is we've ended the bleeding, as I keep reminding you all on these weekly videos. We've ended the bleeding of the move down, and we've gone sideways. Again, just like crude oil, how this resolves is an unknown at the moment, so we'll see how that goes. But for now, not really much to do, unless, again, as I said, you are trading ranges. So if you are trading ranges, you've got the lows of the range pretty much looking at this range here, just using that low, nothing special. And you've got the highs that have been setting. The highs are much clearer because it's a supply zone up there. This is support more than demand, the low end that I'm highlighting here. Now, if one wanted to be aggressive, that's the daily chart. What are we doing looking at the daily there? That should be the weekly. Apologies for that. I hope I looked at the weekly in crude. Yeah, pretty much. So that's the weekly in crude. Ugly. And the daily is actually clearer where crude is concerned. Well, let's go back to nat gas. So that's the weekly on nat gas, and it's again clearer on the daily in this case. I was going to say, if you wanted to be trading ranges, you're looking at these levels, of course, now for demand, and the supply, you are sitting in one. It's not the greatest. I've said I'm not looking to trade these, but I can see why someone would. My only encouragement to you would be try and use confirmation rather than setting and forgetting at embedded levels in this zone. And trading embedded levels can be quite challenging, especially if you're new, for anyone new watching the videos. But for now, looking at, say, if we let's do it, let's just go to the 4-hour in here. So on the 4-hour, you can see there's still no evidence. If I open this 4-hour chart, there's no evidence in here that sellers are taking any sort of control. There's no evidence as yet. That could all change in the week ahead, but you don't have to be the first in to make money. Okay, so that would be my humble suggestion. Let it come in, check for confirmation, wait for the whites of their eyes, and then take the trade. So that's crude oil and that's natural gas. If you have any questions about them, just post it below the video and hopefully I can answer them. All right, let's move on to the metals, and we'll start with platinum. Platinum, we had this level marked in last week, which proved to not work because prices traded above that high. We were looking at supply. We were sitting in weekly demand, in a weekly uptrend. Prices have pulled back, and this was the first attempt to hold by trading through that weekly supply. So that level didn't hold, and it broke through the demand that it created. Right? So now the question remains, where is the buying opportunity? As supply and demand traders, we're taught to buy at, big picture levels. Well, we've just seen an example that did not work. It just didn't. So what do we make of that? Okay. The other thing supply and demand traders do is say, well, I'm going to take the extreme. That does have a higher winning percentage usually, but it also fails. Why? Well, because you are still in a downtrend. You made this move here was your first attempt to end the downtrend, and we just saw that the seller saw this as an opportunity to pile in short and managed to get it to new lows for the entire move. So this is where I say to practitioners of supply and demand that it has many advantages. One of the disadvantages can be that you will be early, and early signals tend to also be more frequent and therefore have more false positives. So just be mindful of that. Being patient, there are filters you can use. Yes, they will cause you to get in later than the supply and demand trader who is buying as prices are dropping in, but you will sleep better at night. Your win percentage will go up, although that's not really a useful metric, but you'll also have, your psychological mental capital will also be better if you take enough paper cuts. They should be paper cuts because hopefully you're all sizing your positions properly and not, taking huge losses. But if you take enough paper cuts, you're going to be bruised, battered, hurt. Your mindset, even when the good opportunities, the high probability opportunities come up, your mindset will be so whacked that you will not be able to trade it as well as you would have if you didn't have so much baggage to go through. So there's a lot that goes into that. Again, these videos, we don't have much time to go into. Suffice to say, yes, we are looking for buying opportunities, but they are not yet set up in this market. Okay? Nothing to do but observe here. I would say continue to observe, watch for that supply level to break through. If this happens, if we break through there and go up, then you can, again, sit up in your chair. Should you buy it again if demand is created here? Whilst it has higher probability, it's not the way that I trade it. It wouldn't be the way that I would trade it. I would have a slightly different entry model. But I have friends and students who do trade this, and we've worked filters into that process for them so that they don't end up, with, death by 1,000 cuts. Okay? Wasn't intending on going into such a long session, but sometimes the teacher just comes out of me. Okay, so gold. Still not sure what it wants to do. Gold is not sure what it wants to do. Hanging at this area. What has happened this week, if you're observing price action, is we've sprung a few traders here. Anyone who tried to go short as it tried to break out of this consolidation area has been, for now, caught. Depending on where their stop was, if it was above there, they've been stopped out. If it's above there, they're probably sweating quite a lot right now because prices have come really close to stopping them out. This may be the turn. It's hard to tell. It may be, but we will see it when it happens. And try as much as you can not to engage in that, oh, but I'll miss the move. No. There aren't ever only one opportunity to get into a market. So rule number one, preserve, preserve, preserve. Don't lose your capital, otherwise you won't have any capital to trade with, and you'll have to refund an account, which may or may not be possible depending on where you are in your life. So it's still on the watch list, nothing to do. Moving swiftly on. Copper, we are into the area of supply that we talked about last week. For the traders who are trading set and forget, you are in already. This is the trade in copper to go short in copper with the weekly in a downtrend. Prices have risen to a supply zone that is located within the weekly supply area, so going short. I'm not in this trade yet, again, because it is not the way that I trade supply and demand. It is very, very, or it can be, I should say, very challenging to trade a market that is, going in an uptrend with momentum behind it. For those of you who are trading it, when I've talked to many of my students, because I used to trade like this before, not now, what I say to them is a starter position. This is all about risk management at the end of the day. If you're going to go against a trend, because to be fair, you are going against the trend on the daily chart. I don't think anyone can really argue that. That's a fact. If you're shorting, you're going against the trend on the daily. So you might want to use a starter position, or like me, not take the trade at all. Okay, those are the options you have. But should you be buying at this level? That's where we all agree. If you're a supply and demand practitioner, absolute no-no. For the reasons we've talked about, you're in weekly supply, you're in daily supply as well. So you are not supposed to be buying at this level. Should you be trading it? Yes, it's the tactic of how you trade it that way, where we all differ. Okay? And that's where our individual personalities and experience will come in. Okay, so this is the priority market going forward for the next couple of weeks, I would say. Copper, and looking at what it does at this level. Okay. Looking at silver. Silver's holding into these levels, the level on top of level demand, sitting at weekly demand. So this is how I look at the market, and this is the long trade. So it's starting to work and moving up. Ultimately, the targets are up around the 25s, so we'll see if it does make it there. It's not for anyone to get into this trade now. It's too late to get into the trade, so wait for other opportunities which are likely to show up. We never know for sure, but again, keep it on the radar. It is likely to show up. Okay, so that's silver. And finally, in the metal complex, we've got palladium. So palladium is a reject, an imbalanced reject. By that I mean we had the drop from this base drop weekly supply zone that was created, and an immediate return. I call them railroad tracks. It's like one train going, south, and another train going north. And this this last week, the range of trading has been embedded all inside the week before. That's why you have the dot below. For those of you who've asked, that's why you have the dot below that candle. What we see, though, I've done a video where I've given my views about why I'm not keen on trading short, for example, in this case, because it was a drop to the downside and a rally back up to the supply that you can see here on the daily chart. Why I don't think it's a good idea to go short there. It's not really, in my type of trading, it's not one that the probability is high enough for me to consider. So I know there are other people who trade it, and that's absolutely fine as well. It's just not my trade. Okay, so but we are still in a weekly downtrend. We're in a daily downtrend. We're into weekly supply and daily supply, even though it's not properly formed, and there will be traders who will be going short. I'm wondering out loud, if I may, whether this is going to end up being a sort of basing pattern, because this is a strong rejection. It hasn't shown that buyers have, seen this, the selling out totally, but they've definitely stalled it. So nothing to do for now in palladium. I'm just watching it. Okay. So that's that. Let's quickly go to the ags. 17 minutes already. I talk too much. Okay. Didn't mean for it to be that long. I do apologize. So, quickly, wheat. Nothing other than a significant event this week where we've taken out some supply on the weekly. It wasn't great anyway, but we've managed to trade through it. We're now dealing with very, very ugly supply right there. So not necessarily the place to be going long after such a significant move. So it's a watch and wait and see. The aggressive supply and demand trader will be saying, right, I want to buy when it pulls back to there, which this is what it looks like on the daily. So they'll be looking at this quite wicky area on the daily to say that's where I want to get long. There will be others who will be hoping it comes down to the extreme. Because this market has just ended the down move and is yet to begin the up move, the extreme carries a higher probability. Clearly, both of them are aggressive also for that reason. But in this scenario, if one must trade and looking for which one has a higher probability, that will be the extreme. Okay. Soybeans. So soybeans, again, blown through several levels. Again, giving us information that buyers are stepping in and taking over this market. So now we have demand levels being created and respected. Not just that one, we also have this one that we marked off last week below. It didn't get to that one, but it's created a new one and taken out supply levels. Not a good place to buy because all of that is still sitting within weekly supply. Should we be going short? Well, here's the thing. I use this as a lesson today. Again, for the set and forget, I don't think anyone would argue that that was a supply zone. We just traded through it. We just saw it trade through this one, which was at the edge of that weekly supply zone. It traded through that. So for anyone trading the set and forget approach as these markets are rising and changing trends on the smaller time frames, this is what I mean by it can be quite challenging, because you will find the market will blow through those zones, mainly because trends have a tendency to persist. And now it's way beyond there. It's gone very far, very far. So it's likely to come down. But there is no reason right now to enter short. We can look for shorts, but we haven't got anything to look at right now. Okay, that's a really good example of why it can be challenging. I'm not saying we can't do it, because of course there are times we do it. It's in the filters we use to filter out the really good trades, and the size that I would encourage you to do your homework around. If you are going to take these kinds of set and forget trades, they need to meet a higher threshold. They need to have more filters around them for you to take them. Okay, and that's where there are certain indicators that I know that supply and demand traders use that can be helpful. For example, a Keltner channel, a Bollinger Band, an RSI. There are things that people look at that can help them when prices do reach a certain level of extension to take counter trend trades. Okay, and when I say counter trend, I mean counter to the daily trend. On the weekly chart, you're still in a downtrend, so you're not going counter to the big picture. We're talking going counter to this trend. Okay. Corn. So corn also had a hugely significant event. We took out weekly supply. We already took out one weekly supply. Again, this was an example of railroad tracks. So we had this level base drop supply, and prices fell away from that level in this candle and immediately returned. This is why I don't like it. It's a rejection by the market of that imbalance, and buyers seeing that imbalance as a great reason to go the opposite direction. And they've taken out that supply level. So that was the first, shot across the bow, the first warning sign to the sellers that, the buyers are coming. So we pulled back, and then now we've rallied, and obviously that was under threat already. Not only was it quite a volatile zone, it was a zone that was after the zone below it had been removed, so you knew there was change afoot. Now what has been created is demand. Now we have a demand level below. We don't have an uptrend as yet, because I correct myself. We do now have an uptrend because we've taken out two supply zones. We are up against resistance, is what I was trying to say. We're up against this area where the market is telling us there were sellers. There were sellers there, that's why prices fell. There were sellers in that area, that's why prices fell. So again, not the greatest area. And look at, again, another example of an embedded zone. This rally base drop, I'm looking at the daily chart now, the one on your right. This rally base drop, I don't think any supply and demand trader, who was doing their homework would not have seen that level, and quite a move out of it. It was, again, right up against this move up, and it got blown through because of the changes that were happening on the weekly, because of the strength that was coming into the daily. Not a good idea to be just placing that set and forget order there and leaving it alone. It's quite aggressive, and it can be challenging. You will have quite a difficult time, is my experience, when I used to trade like that with the supply and demand methodology. But those are the disadvantages I sometimes refer to. Hopefully one day we can go in depth about them. Okay, so nothing to do right now but observe. For those who are long, enjoy the trade and manage it properly. You know who you are. Sugar, we're looking at a market also that is reacting to demand and going up and up and up. Yeah. And creating demand zones as it is doing that. Blowing through levels, key levels on the daily, coming off of weekly demand. So even as this market ramped up and became quite parabolic, you can see the fall into the supply wasn't that aggressive. That's important to note. This wasn't aggressive selling coming in saying, oh, this market has moved up too fast, too quick. I'm looking at the weekly chart now. They weren't seeing this on the weekly. Traders weren't seeing this on the weekly and saying, oh yeah, I really, really want to get short now. No, this looks more like managed profit taking with no significant selling coming in. And I can see that from just the color of the candles and their sizes and the fact that they don't have any scoring on them. So we have it. They've come into demand in an area where we expected buyers to step in, and buyers have stepped in, and they've now turned this into an uptrend. So this market has turned to the weekly. So the target for the trade will be up into these areas there. Okay, so if we pull back, potential opportunities to go longer there to get to the higher levels. Oh wow, 26 minutes, guys. I do apologize for the length of the video. I went way deeper than I normally do. I hope you do find it useful, and thank you for watching the video. Please subscribe to the channel if you haven't already, and share the videos. I'm hoping, one day these videos get up to 200 views before the next one is out. So we'll see. See you all in the next one. Bye for now.